Tether, the issuing company behind USDT, or Tether dollars, has become one of the largest entities in the cryptocurrency space. USDT are an integral part of the trading ecosystem on nearly every cryptocurrency exchange. As Bitcoin and other cryptocurrencies have continued to grow, Tether has grown right along with them. Earlier this week, Tether announced that USDT had surpassed the $50 billion market cap milestone for the first time. Finance Magnates sat in with Paolo Ardoino and Stuart Hoegner, who are respectively Tether's Chief Technology Officer and General Counsel, to discuss this milestone, as well as Tether's transparency, ecosystem initiatives, and future plans. I'm Rachel McIntosh, and this is FMTV. Okay, so Stu and Paolo, thank you so much for taking the time and coming on the show. It's such a pleasure to have you here.
Thanks for having us.
Yes,
Thank you.
Definitely. So I know who both of you are, but for people who may not know, can both of you just briefly introduce yourselves and talk a little bit about the work that you do, starting with Stu?
Paolo's story is much more compelling, but I'll happily go first. So my name's Stuart Hoegner. I am an attorney. I am the general counsel at Tether and Bitfinex. And I take care of the day-to-day legal matters inside of the companies. I started, in terms of my Bitcoin background, I started reading about Bitcoin in October 2011. And my first reaction was interest in its potential applications and as an internet gaming and betting context. But what really got me excited was a random dinner with a fellow named Eric Voorhees, who has been and still is a visionary in this space. And he opened my eyes to the possibilities. And from there, I met with the guys at Bitfinex and Tether eventually. And Paolo and I eventually met, and here we are. So
the rest is history. Yeah, Paolo. So can you talk a little bit about yourself and the work that you do?
Yeah, I'm Paolo. I CTO at Bitfinex and Tether. I'm a developer since my youth. So started coding at 8 and came across Bitcoin in 2013, so early 2013. And I thought the first thing that I thought was, wow, this is a great innovation. I was dealing back then with hedge funds, reconciliations, accounting, and was kind of a mess because I was running a portfolio management system for a few hedge funds, and I was spending my life in trying to reconcile numbers. So when I started looking into the blockchain as a solution for many problems that were in the Main Street financial space, that was quite refreshing to see. And then, of course, I started looking into Bitcoin more as a currency and a store of value. And then, it opened up my mind into all the possibilities of, keeping, your wealth, control of your wealth and privacy and so on. So I think that I was blown away. I would say not exactly almost immediately, at least I started first on thinking how I could apply this technology to the problems that I was facing. And then eventually in 2014, I met with Giancarlo, that is Bitfinex and Tether CFO, and what was amazing. I decided to, after a little bit of time, decided to shut down all my other jobs that I have and the startup that I had in London to join full time, because I understood that was my not just a career but a way of life that I wanted to pursue.
Okay, very interesting. So just briefly, I want to ask about the words way of life. So what exactly do you mean by that? What appealed to you about this sort of cryptocurrency world?
I would say, and I'm going to focus more on Bitcoin. I think that there is. I'm a big advocate of privacy in general. I believe that the privacy is a fundamental right for everyone, and I believe that Bitcoin is an enabler of privacy for people. In the sense that it is important that if your parents worked for a long time to create something, and to earn some money, and then they put in the bank. They put in that money in the standard financial system. Sometimes is not clear where that money go, how much that money in effect stays in the bank, and so on, right? So in general, we have seen that also in different places like Venezuela, Argentina. We see that government might make really bad decisions in terms of economical policies. So Bitcoin is a way for people to keep control of what they work for. People work for the entire life to build something, and having a technology that allows them to preserve that something, that huge effort that they spend their entire life on, is quite important. And you can pass that effort through generations, keeping control over it. So for me, the ability or the option, because some people just want an option, right? Not necessarily you want to have everything in Bitcoin, not necessarily you want to do that should be a way of life for everyone, but just working for me, just working to provide an option to people. That is something that is the meaning of the work that I'm doing, Bitfinex and Tether.
Very, very interesting. Stuart, do you wanna sort of comment on that? Was there anything, that sort of resonated with you about this Bitcoin sort of philosophy as a way of life as well?
The good thing about following Paolo is that he said all the good things, and I don't have much to add. No, but I think Paolo's exactly right, and I think that's a way that we have approached innovation and our product rollout, and hopefully the way we deal with our customers at Bitfinex and Tether, which is freedom of choice. We want people to have the options to trade what they want to trade, and to transact how they want to transact, within the bounds of applicable law. So that's what we're all about.
Definitely. So most people probably who are listening to this podcast know a little bit about Bitfinex and about Tether. But I want to focus on Tether for a moment. So for somebody who maybe doesn't have a good idea of what Tether is, can you give us sort of like an elevator pitch, just a little overview of what Tether is, what its use cases are, who uses it, etc.
Maybe we'll share this, Paolo,
Sure.
if you agree.
Of course.
So Tether's a utility token, Rachel. You buy a Tether token that you can use in any number of ways. You use it in trading and other commerce, for example. So you come to Tether, you give Tether $1, and you get, subject to the minimums that we have in terms of transactions, and you get a Tether token in return. Well, why might you buy that Tether token? Well, many people buy it in order to have a faster and in some ways a more effective form of its underlying value, and that can be helpful in things like arbitrage, different trading environments, and those are the kinds of use cases that we see Tether engaging in, and facilitating.
Yeah, I think that you are right. You are absolutely right in that. That is really the fundamentals around Tether. I would say, yeah, that one of the most important use cases and one of the reasons why Tether was born was crypto arbitrage, right? In order for this industry to thrive and become, go to mass adoption, it's important that while there are many trading platforms that are trading the same trading pairs like Bitcoin USD, you would expect, at least with a traditional finance background, you would expect that all these trading venues would have the same price. So long story short, the simple idea behind Tether was, okay, in order to facilitate trading across different venues, to make sure that all these trading venues could have the same price, so arbitrageurs could move funds back and forth in in an easy way, what we thought about was, okay, Bitcoin, you have a trading pair like BTC USD, right? But BTC moves every 10 minutes. You can move one BTC and takes just 10 minutes from moving it from one location to another. So from one exchange to another. The problem is that with dollars, as Stu said, you don't have the same. You cannot move dollars with the same speed, at least not in the crypto industry. So I think that, as you said, people wanted, traders wanted to have to use Tether as a better and more efficient representation of the underlying. So if you have a trading pair, again, you have BTC USD, you want to be able to move BTC and USD at the same pace so that you can sell BTC where the Bitcoin price is higher, on the exchange where Bitcoin price is higher, and then you want to buy back the BTCs where on the exchange where the Bitcoin price is lower. But in order to do that, you'd have to move back and forth BTC and USD, but USD are slow. So the entire idea behind Tether, especially at the beginning, was, okay, let's use the same technology that Bitcoin is leveraging to move also dollars. And the crazy thing is that, it was 2014 when that idea came up to the Tether team. And today, you have central banks that are discussing about it. And of course, adoption is growing and so on. But the fundamental use case was that.
Right. Okay. So I see. So that sort of explains where, let's say, the inspiration for Tether originally came from. And I want to touch a little bit more on the history of Tether. So, seeing that Tether just recently crossed this $50 billion market cap, which is quite the milestone. Congratulations on that. So how did Tether start from, this idea that you could create a cryptocurrency that could be used to make trading with USD faster on the blockchain, to this $50 billion, dollar entity that plays such an important role in the cryptocurrency ecosystem as a whole?
Well, I think that if you look at the history of the Tether growth, you would see that initially it took a little bit of time for the Tether team to explain the value proposition to the other exchanges. Crazy enough, was actually difficult to have other crypto exchanges to digest why it was important to have Tether as a replacement for dollars into the crypto space. But when adoption came was 2017, most of the exchanges started to trade Tether. All the new cryptocurrencies that were created against Tether pairs. And that, of course, created more demand for Tether. I think that by the end of 2017 was the first time we reached $1 billion. And actually, the big boom that the Tether had, if you see the chart, is from 13 March 2020, the Black Thursday and Friday. And I believe that there people realized and traders realized that, first of all the market crashed badly at that time. But when the market crashed, there are people that are taking opportunities. But in order to take opportunity and on different exchanges, when the price is subject to this high volatility, you need to be able to act fast. And who had dollars could not do anything. Because if you recall, the entire move was during, if I'm not wrong, when Trump announced closing flights into US and so on, right? So there was all the markets were crazy, and moving dollars at that time was almost impossible, where everything was slowed down and so on, because not only crypto markets were down, were crashing, everything was crashing. So only who had tethers could act fast, could really take good opportunities to buy Bitcoin on the cheap side and arbitrage and sell Bitcoin at a higher price, because at some point spreads during those hours on different crypto platforms were even $2,000. So you can see that if you are able to move and make really quick arbitrages, you can make a ton of money. Mm-hmm. So that's without hiding behind the finger, that was one thing that clicked into the minds of many traders. They said, okay, but why? If that happens again, I want to be ready.
Yeah.
So we started seeing an increase demand from OTC desks, because we have seen institutions finally interested to jump in, because the coincidence of that event was also a different choice in the monetary policy from the US and Europe. So more institutions start thinking of Bitcoin as an edge, or let's say a way to differentiate their investments anyway. Mm-hmm. So they started, so OTC desks and traders and big trading firms in the crypto space started to get orders from institutions. So an institution was going to come into this OTC desk and asking, okay, I want to buy 100 million, $500 million worth of Bitcoin. So how I can do that? So the easiest way to do it, and the most efficient, is not taking $500 million and sending all in one exchange and buying $500 million worth of Bitcoin. So the way it works and should work is that in order to impact the price the least possible, you would trade on all these trading firms and OTC desks trade on 10, 20 different venues, right? So what happens is that they take $500 million, they split in 10 buckets, and they send to 10 different locations, so they can average buy and exploit the better liquidity possible across multiple locations. Mm-hmm. And you repeat this back and forth many times, and you get to 50 billion. Then, of course, we have different other business model strategies around Tether, but the massive growth of Tether recently is due to really interest from institutions jumping into crypto.
I see. Okay. Thank you for clarifying that. And Stu, do you have anything to add before I jump into the next question here?
Not really much to add. Look, Tether is a reliable and quick liquid utility, and that has been the basis for our success. And as Paolo outlined, that kind of functionality and that kind of innovation and the ability to go live on different blockchains, we're on 8 now, has been the cause of why Tether is so popular and therefore so liquid and so easy to use for a lot of these different traders. Right,
exactly. And so I want to also ask you, did you ever think, that all these years later you have this $50 billion market cap? What does that really mean for Tether in terms of the way that Tether sort of thinks about itself?
Speaking personally, mm-hmm. At one point, I never would have thought that we would have that kind of a market cap. It's a measure of our success, and it's a measure of the markets and our customers and our counterparties' confidence in us, and that's tremendously rewarding. Mm-hmm. But it's just another step on the road, and mm-hmm. we see it as a big milestone, but it's not the last one for us. Okay. And it's a measure of the tremendous ability of this whole industry, not just us, but the whole ecosystem to grow and to offer new possibilities. That's the really exciting part. I mean, the numbers great, but the really exciting part is what we can do next. And one of the great things about the team is that we are always looking to like, what's next? There's no resting on our laurels, and what is around the next corner, and what can we do? And that's really exciting for me.
Yeah, absolutely. Paolo, do you have anything to add?
Yeah, I would. I agree with Sue. I would never have imagined, 1 year ago, that we would be today at 50 billion, 51 for the precision.
Mm. Yes, yeah, exactly. Stuart, you mentioned that this is sort of, it's not, it's about Tether. This milestone is certainly significant for Tether. It's also significant for cryptocurrency at large, and certainly shows how much the industry has grown. And as cryptocurrency has continued to grow, we've also seen more and more talk about the ways that stablecoins, private stablecoins like Tether, can be used in the crypto economy, in the real economy, but also central bank digital currencies. Uh, those kinds of stablecoins are not quite part of our reality yet, but it seems pretty inevitable at this point, let's say. Certainly in China, and then, with other countries following. I want to ask you whether or not you see Tether as having played a role in the growing prominence of stablecoins in the economy at large. And what do you think stablecoins will be in the future? What do stablecoins, what role will they play in the development of the future of money?
It's an interesting question. I think that, and there's a couple of parts to it. As to the intersection between CBDCs and Tether and other stablecoins, I think that Tether and other stablecoins have led the way, and Paolo touched on that earlier. Now we've got central banks that are thinking about these kinds of things, and that's great. And private stablecoins kind of give them a route map or a path to show them how that could be done. And that's very interesting. So we see it as a validation of our model, and not so much a threat. And it remains to be seen how they're going to innovate and what kind of blockchains they're going to use to issue those CBDCs. So we see it as definitely a validation of how we and other stablecoin issuers have sort of led the way. And in a sense, imitation is the sincerest form of flattery. So we see it as a good thing. More generally, I think there's a lot of room for different business models built on the bedrock, not just of Tether, but of other potential stablecoins, and certainly certainly of Bitcoin, for example, and other crypto. The entire fintech space is causing change and evolution in the traditional finance space, including as to payments and other things. So I suspect there's always going to be bankers, and there's always going to be a need for credit. But Tether and other stablecoins and the fintech space provide different tools to those and other up-and-comers. And in one sense, fintech potentially extends the toolkit to those who might not be fully participating in that economy right now, and that's very exciting. So Tether can continue to play a role, not just as a bridge. People talk about Tether and other crypto being a bridge to the old, to the legacy financial system, but I think Tether can represent that bedrock, not just a bridge, which is interesting for me. Absolutely,
and Paolo, do you want to add to that as well?
Yeah, I think that at least my gut feeling tells me that these central bank stable coins will be actually a replacement of the outdated interbanking and intergovernment settlement system, right, and the wiring system. So I believe that is a bit naive thinking that Bank of China or England would issue on Ethereum, right? So our role as a privately issued stable coins would still, instead of receiving a wire through SEPA for buying from a customer that wants to buy tethers, we would, instead of calling it a wire, will be still a wire, but will be settled through a private blockchain that is being managed across as interbanking blockchain that will take care of all the settlements and so on. And then our role will still bring and lead the innovation, bringing the privately issued stablecoins into all the new application spaces like DeFi and just high frequency payments and smart contracts and so on.
Right. And do you see stablecoins and the DeFi, all of these different platforms? You've already sort of touched on stablecoins not really being a competitor to nationally issued central bank digital currencies, but do you see stablecoins and cryptocurrencies evolving into a serious competitive threat for example, credit card payments and the traditional financial industry as we know it?
I think that when it comes to credit card payments, absolutely. So I think that Tether will definitely be targeting in the next months strategies in order to offer a more transparent and more diversified approach to stable payments, right? Because people like paying with credit cards because you are in a shop, you pay $1 for a slice of bread, and that's it, right? Nothing to think about in terms of effects and so on. But still, you pay a nice percentage to the credit card issuer, or debit card issuer, and that's, first of all these steps are not transparent,
right?
And they are quite expensive. So I believe that when it comes to mass payments, stable coins will lead the way to a revolution.
Okay, yeah, really excited to see what comes out from you guys with regards to that over the next couple months. I want to talk a little bit about since you mentioned transparency, Paolo, the role that Tether plays in the cryptocurrency ecosystem is big enough to sort of be considered as systemic. There have been some questions about how Tether is backed, or sort of how the mechanism of Tether and USDT works. So could you talk for a moment about how Tether is backed? How does that work? And how do Tether holders know for sure that each of the Tether dollars they hold is tied to one USD?
So Tethers are 100% backed, Rachel, full stop. And until last month, people could know, if they wanted to know, from a number of sources that Tethers were fully backed. Our bankers, for example, and they knew from major customers of Tether that had decided to speak publicly about it, that they had redeemed Tethers freely over the years and had access to their underlying funds. As of last month, they know through our assurance opinion for February 28th, issued by Moore Cayman on the basis of our consolidated reserves report, that Tethers were at that point fully backed and that there are sufficient assets to cover all liabilities, not just issued Tethers, but all liabilities of the consolidated group. That exercise has now been repeated in respect of March 31st. And that's being released. We're recording this on the 28th. That's going to be released tomorrow, the 29th.
Okay.
And will be repeated quarterly going forward. So that's how people know that all Tethers are fully backed through that assurance, through that independent assurance process that we've engaged Moore Cayman to do. As well as through other avenues that have come before, but we don't have to speak about that here. And as to the specific breakdown, stay tuned for more information on that. We will be making more on that public going forward. But the basis of the backing itself right now is can be seen quite clearly in the assurance opinions that we have.
Great. Yes. And I also want to ask about the authorization process, how it, how does that process work when it comes to printing new USDT? And also how are the records of Tether's printing and banking kept secure and made transparent as well?
Sure. So our process is also public, right? We talk many times publicly about it, and has different components. First of all is definitely transparency and also security. So, one little piece of information that sometimes people forget is that the actual process of creation of Tether, that is we call authorization,
Mm,
is actually extremely sensitive, because in order to do that, there is a group of signers that have to access private keys through other hardware wallets, and have to co-sign one transaction to authorize new tethers that will be put into the treasury. And you can see how you want to keep those private keys as safe as possible, and that which we do at the highest levels that you can imagine. And also, we want to make sure that as a security precaution, the signers will touch those private keys the least possible.
hmm
So that's why the process of authorization is important. So you might see round numbers where we that of our new authorized tethers. So we usually authorize in batches, so that we have tethers that can be held in our treasury on the shelves, and so that when customers wire in money or send in a fiat, we can send and actually issue the tethers. That means we transfer those tethers from the treasury to the new customer private wallet, so that we keep segregated the private keys for authorization, so for the actual creation of blockchain of the tethers, from the treasury private keys that instead are needed in order to do the actual issuance, so moving the tethers from the treasury to the customer wallet.
hmm
So if you sum that process that is completely transparent on blockchain, and under the scrutiny of everyone, with the attestations that are now periodic, then you get full transparency, full information about banking, and that's the best you can dream of from a company like us, from a stablecoin issuer. I believe that we grew into providing the highest level of transparency that among all our competitors, and plus, and also if you also think to the fact that we have been under extreme scrutiny, we are again increasing even further our level of transparency, and we will keep working to provide additional information to our users over the next months.
Thank you so much for explaining that. Um, I want to talk a little bit also about the way that Tether has been adapting and reacting to changes in the international regulatory scene when it comes to cryptocurrency. Obviously, you guys are one of the biggest entities, if perhaps not the biggest entity in the cryptocurrency space around the globe. As such, I'm sure that there's been many many ways that you've had to adapt and react to changes in regulation. So I want to ask you, from your perspective as this global entity, what sort of trends do you see happening in regulation? And also, what do you think still really needs to happen in order for cryptocurrency to move forward in terms of adoption?
Um, maybe I'll jump in here, Paolo. The trends are really at this point fragmentation.
Okay.
There have been some measures, I think helpful measures, somewhat helpful to measures taken by the FATF, and that's a coordinative body. So there might be some harmonization in that respect, but how that's implemented at a national level can vary considerably from place to place. So I think we're going to see different approaches. I think we've already seen vastly different approaches to this industry taken in different jurisdictions. And we are actively engaged globally to understand what the guardrails are. We're trying to understand where things are going and working with policymakers and working with global bodies and associations to provide the benefit of our experience. So I think that it's a little soon to say, but I think we're going to see more and more of that in the short term in terms of this what I call fragmentation. So we're going to be pursuing different approaches in different jurisdictions in order to address that.
Right. So it's sort of this fragmented regulatory scene means that you sort of have to take a fragmented approach to being compliant.
It means that we're going. Yeah, it means we have to keep an eye on a lot of different places.
Yeah.
And if we have a license in one jurisdiction, that we have to understand what that means for all the others. And like a lot of people look at our registration. We're registered as an MSB with FinCEN, and that's great. And we have our independent review, and we build our compliance programs to meet or exceed those requirements. But that's only one part of the puzzle. There's a whole world out there that we have customers in that we have to grapple with, and we don't even have U.S. customers. We have that reporting in place because we can have customers that may touch the U.S. financial system, but that's a piece of the puzzle, but it's not the whole puzzle. It's going to require us to have a flexible approach. It's going to require us to look around the world for different approaches and try to bring it all under one roof, and that's challenging.
I want to also ask you guys about Tether's support for second layer solutions on both the Bitcoin and Ethereum networks, and also sort of the fact that Tether has supported these layer 2 solutions. What does that mean in terms of the way that you see both Bitcoin and Ethereum moving forward in terms of development? So, for example, the Bitcoin network and Bitcoin itself is sort of increasingly, arguably seen as a store of value, hedge against inflation, and not necessarily something that can or should be used for smaller payments. However, the Lightning Network arguably could make Bitcoin more suited for smaller payments and more frequent usage, let's say. And Ethereum also has been identified as the potential backbone of the DeFi ecosystem. However, we see similar issues with the Bitcoin network, that Ethereum struggles with scalability. We've seen so many memes about high gas fees over the last few months. So what does the fact that Tether is supporting these layer 2 solutions mean for in terms of the way that Tether sees the future of both of these blockchains?
So if I can jump in on this, I think that, and this is also, I want to reinforce what I said before. For us, so showing support to Bitcoin and Ethereum and trying to be a productive and creative member of this industry is extremely important.
Okay.
So, right. So we are not here again to exploit cryptos as a transport layer to make a quick buck, right? So if we see that Tether, for example, is the first, or at sometimes is the second asset most transferred on Ethereum. So it will use by itself 40% of the entire bandwidth that Ethereum has. So you can imagine that as a responsible group of people and companies, we need also to be constructive for the industry, and we need to take steps and actions to improve the situation, to trying to save, to trying to weight less on the shoulders of the blockchains that we're using, and because that's the only way to reach mass adoption. So what we did is to start supporting layer 2 solution across the top blockchains, so that we could actually push down the cost of the fees, because no one wants to buy something on Amazon but have to spend $30 in gas fees on Ethereum, right? Yeah. Does not really make sense. So I believe that for us is being part of the ecosystem is the thing, and being part of the group that provides solutions and keep growing the ecosystem until it gets into mass adoption for real. This is our work, right? So this is why we are investing a lot in supporting, all these new solutions, all these research projects like RGB, like Omnivolt. All these research projects are trying to create cryptographical solutions to ensure the same level of security of Bitcoin, but not weight, or at least not weight as much as standard transactions on Bitcoin. Same on Ethereum. So that's an effort that we suggest to everyone else and to all our competitors. We were the first exchange supporting SegWit. That is a way to save, let's say, 30% in terms of block space for Bitcoin. We support a Lightning Network straight away, and so on. So yeah, that is what we are, what we do, and why I believe that we are, a healthy group of nice guys and girls that are participating to this industry.
Stuart, do you want to add anything to that?
Nothing to add to what Paolo said.
Okay, great. Stu and Paolo, I want to thank you so much for your time, for all of your effort with this. We did some really heavy lifting on this interview today. Before we go, can you tell our listeners a little bit more about where they can find out more about you and about Tether and Bitfinex?
I'd start with the websites and the announcements and things that we have up there. So it's tether.to and bitfinex.com. I'd start with those.
Great. Okay, guys, thank you so much for your time. I really appreciate everything that you contributed today.
Thanks very much, Rachel.
Thank you very much, Rachel.
Yes.
Thank you.
For more news, events, and podcasts like this one, visit financemagnates.com. Thanks for listening.